Hello, and welcome to another episode of the Markets at a Grand series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So I'd like to begin with a mic test. So if you can hear me clearly, you can type hi on the live comment section, and these will confirm that everything is working just fine. So there is quite a number of key market developments that have happened so far. And as we all know, this being the window upon which the US market opens, or what we call the New York Open, we will be expecting a lot of increased volatility in the markets. So it's very important we understand what happened before that and what we are expecting to see in the New York session. So clearly, we know that on Tuesday, judging by what we are seeing on the economic calendar, we are not expecting much to be happening. So it's a technical trader's paradise. This basically means there's no major economic news or announcements that we're expecting in the near term. So this basically implies that technical price patterns reign supreme. So on one hand, we know that US President Biden basically negotiated a deal with House Speaker Kevin McCarthy to suspend the debt ceiling for the next 2 years. So it will be active from January 2025. However, these negotiations are not complete yet. The bill has to be voted and to pass through Congress. So right now, as we speak, the Democrats are running their own Congress members, whereas the Republicans are also doing the same to make sure that they get the appropriate numbers to pass this bill a week before the US gets to its date, which is estimated to be somewhere in between June 1 and June 5, where the US would be unable to honor its bills. However, once the debt ceiling is lifted or suspended, then the US will basically be able to raise more money and use that to fund its deficit budget. So with that in mind, for the economic calendar, you can see nothing much is happening. So most recent data came in at 4 p.m. That is the housing price index data, which came in stronger at 0.6%, meaning that the housing sector is strengthening yet again. So it's not a very good signal when you see housing starting to strengthen stronger than expected. The Fed is not looking to achieve this. The Fed has been looking to weaken the housing market, weaken labor demand, and also weaken the wage price growth. And in that case, it would be able to achieve the inflation target of 2%. However, with a very strong economy, we have been seeing strong data coming up over the past couple of weeks. And also remember, on Friday, we'll be expecting to see the non-farm payrolls, which is a measure of how strongly the US economy is creating jobs. So this will give us an understanding of the number of jobs created in the US besides the farming sector in the last 1 month. And also, we'll also be looking at the wage price growth, which was 0.5% in the previous reading. So we expect this to slow down to 0.3%. So if it comes out stronger, then the possibility of the Fed hiking interest rates further becomes stronger. So nobody wants to see stronger rate hikes. But for us, as technical Forex traders, our goal is to take advantage of the volatility. So in this case, if all indications show that we have a very strong US economy, then there is a good chance that we can bet on a stronger Fed rate hike, which would basically imply a much stronger dollar. And for equities, they could weaken as a result of further tightening by the Fed. So that's one of the considerations to put on the table. And also, we know that the Fed also looks at consumer surveys as well as business surveys. And one of the most important data we'll be focusing on today, which comes up at 5 p.m., is the CB consumer confidence data. So from the most recent reading, you can see that consumer confidence declined in April. So it fell to 101.3, down from 104 in March. And the present situation index, based on consumers' assessment of current business and labor market conditions, increased to 151.1 from 148.9 last month. So the expectations index, based on consumers' short-term outlook for income, business, and labor market conditions, fell to 68.1 from 74.1. So the idea basically runs this way. If consumers respond to a survey by being a little more pessimistic, then it basically represents their current financial situation. So I'll try to make it simpler for you. If let's say some university in Kenya is doing a survey of consumer confidence, and then they come to you, they ask you, how do you see the Kenyan economy performing for the next 1 month or 3 months? Then your response may be more inclined towards your own financial condition. So if you own a business and sales are not doing well, then you tend to give a response that is quite negative or pessimistic. But if, let's say, your employer just raised your salary, then you'll tend to give a positive outcome out of that. So when you focus on these consumer sentiment surveys, they basically tell us how the consumer is feeling, what is the financial condition of this consumer, if their debt obligations are getting worse and worse, and things are getting tougher, prices are going higher, then in that case, they'll tend to give a negative survey. So it gives a glimpse or an image of what to expect on the near term. So in this case, over the next 1 month, if the consumer confidence is low, then we expect consumers to low or slow down their spending over the next 1 month. So it's a very important data point that the central bank of the US also considers while making decisions. So if confidence is going down, it's well within the expectations. If it's rising and people are looking to spend more money, then it becomes a much bigger challenge to fight the current challenge of inflation. So with that in mind, this was data from last month. You can see it was updated on Tuesday, April 25. And today, being the Tuesday, 30th May, we will be getting more data on the same to try and understand the movement here. So for instance, you can see that during the COVID period, that is 2020, we had this period where consumer confidence really went down. So there was a lot of panic as a result of COVID-19. There was a lot of COVID-19 restrictions that did not allow people to do business. So in this case, they lowered their spending. We could see a stock market crash happening. So then we had the recovery part. So people are very confident. They went on a post-COVID shopping spree. So after they did this, we saw markets recovering strongly. So this happened during this period, 2021. Then last year, we had confidence going back downwards as the Fed kept on tightening, raising interest rates more, and the stock markets were not really doing well. So towards the end of last year and the beginning of this year, there was some form of increased confidence, but now it seems to be on a downwards path. So if there's a lower confidence, then that would be nice for the Fed. They might slow down on interest rate hikes. But then if there's a spike in confidence higher, then that will be a problem for the Fed, especially for its next meeting, which is scheduled to happen on the 14th of June this year. That should be 2 weeks from now. So that's the biggest thing that you're expecting in the market today. So a big spike upwards in consumer confidence would basically mean that the Fed would go for a rate hike, and that should be very positive for the dollar, but negative for equities. And on the other hand, if we happen to see consumer confidence continue to go down, then that will be negative for the dollar and positive for equities. So that's it. That's what we're expecting as the major or the key event during the New York session. And besides this, there's more stuff that has been happening in terms of price action. So one key thing is that the NASDAQ, which has been one of the strongest markets this year, has been able to reach 14,500 for the first time since I think this was last year. Yes, since April last year. So we are looking at a 52-week high. So more than 52-week high actually. And in this case, we are seeing all the optimism that has been happening here this year. So you can see from December last year, it has been completely bullish for the NASDAQ. So while the S&P 500 has not been doing similarly well, it has also made some significant gains from the end of the year last year. So major trend lines have already been broken. You can see this particular trend line was broken earlier in the year. Then we had a new trend line arising from this high and this other high. And every time there's a new trend line seems to be broken, basically showing the level of confidence in this market. So with this trend lines being broken, then it indicates there is a lot of optimism in US equities. So for now, we remain bullish, especially considering that the US debt limit deal is almost completed. So this is leading to a very strong equities market. So while I'm still bearish on this, I'm expecting stocks to weaken at some point in the year. For now, following the price action, basically indicates there is still room for more upside. So for now, you can see that the most recent highs, they just keep on getting higher. And if a market is forming higher highs, then it's pretty much obvious that you trade on the upper side, in this case being bullish. So market that is forming higher highs and higher lows basically screams that you go for bullish positions. So the current price level might not be the most appropriate for a bullish position, but then if there's pullbacks, then we could see a representation of opportunities to make an entry and trade towards the direction of the trend, which seems to be bullish. So for US30 or the Dow Jones Index, this one has been the most weakest. So far, you can see the kind of bearish wedge that has been forming here. So market keeps going up and down, and now we just crossed the weekend gap. You can all see the weekend gap here. So the market closed the weekend gap and seems to be persisting to move further downwards within the same pattern. So we are still not yet through this bearish pattern. So there is a good chance we'll be seeing some further downside in the Dow Jones going forward. So as for UK oil, we have been seeing the market trading in a triangle after having failed to form higher highs. So remember, the market was trading in a channel. So the channel was slightly bullish, moving upwards. Then for the last couple of days, we had a couple of swings that formed a triangle, and then we had this bullish signal indicating a strong entry by buyers, which did not last long. So after one candlestick up, it went back downwards, and now we have a clean break towards the lower side. So it's in order to look for short selling positions in the Brent oil charts. So for majors, I think they're still moving sideways. We don't have a lot of momentum happening. So for instance, if you're looking at New Zealand USD, then this seems to be the case. So nothing much is happening here. Market just oscillating between two trend lines without much room for squeezing in some trading opportunities. So for Audi USD, it's still something similar. So you can all see that this seems to be the resistance. We also have some support in here. So market is not clearly showing a strong direction. So a lot of indecision, considering this is the average price movement over the last 4 days. So gold was trading in a triangle since making that sharp fall last week. So it kept trading within the triangle up until it broke towards the lower side early this morning. So after breaking, it went back, did not confirm a retest, so it broke to the upper side and has been rallying upwards since. So there seems to be a nice target at 1964.57. So this seems like a welcome pullback, especially if the 15 minutes candlestick was to close like this, then it would make more sense to trade the continuation towards the previous high and perhaps even higher towards a key target. The base of the pattern or the top of the pattern was 1964.57. So for USD JPY, we have what looks like a double top pattern that is almost completing. So if I just clean my chart here, we can all see the M formation from this chart. So the neckline was the lowest price here, and the major point was this high, followed by a pullback all the way down to the neckline, and then another jump back to the previous high, and then further downwards to the neckline. So the neckline was broken in the last 2 hours, and it's indicative that the USD JPY has successfully formed a double top pattern, And there's a good chance we'll be seeing some further downside on this one, especially considering that we're almost breaking the lower trend line. So the lower trend line seems to be following this path here. So if the market breaks, then there's a good chance we'll be trading a much stronger JPY against the USD. So for the dollar index, it's already showing some signs of weakness. So after having made some good rally over the past couple of weeks, I would say the last 3 weeks straight, we had a very nice reversal candlestick on the forward chart, indicating a rejection of higher prices. So from here, you can see the dollar index is persistently moving downwards. So for the past couple of hours, I would say this is 3, 4, 5, 6 consecutive hours, the dollar index was just weakening, basically indicating a weak dollar. And as a result of this, we are seeing other currencies make an impressive recovery against the US dollar. So after seeing the pound USD trade sideways for 4 days continuously, we had a break outside this triangle, and the market headed straight to the upper trend line, broke it, and now we have successfully retested that area. So the retest was very clean. Market goes up, pulls back to the trend line, and now seems to be continuing higher. So it's in order to look for bullish positions in pound USD, and it seems to be a similar path here. So New Zealand USD trading sideways, dropping, and then making a recovery, and now seems to be pushing higher, which is almost a mirror chart of what is happening in the gold chart. Triangle, break down, get back, and move higher. And if you look at New Zealand USD, triangle, break down, move back, and now potentially moving higher. So as for USD CAD, we are still within this kind of flag formation. So there's one trend line on the upper side, the other one on the lower side, and the market has not yet broken any. So if you do a quick overview of this area, you can notice that this market has neither been moving up or down. So it's just moving sideways, with this being the upper limit and this the lower limit. So up until we have a clean break of this flag, then we don't have any trading opportunities. So it might make sense to just wait and see until we see a clean break towards the upper trend line or the lower trend line. So as for European equity indices, we have seen the FTSE 100 break to the lower side after trading sideways for a while. So we notice this sideways momentum here. So if I was to extend my highlight here, I would say for 3-4 weeks, this market was just moving sideways before it broke to the lower side and then moved up, and now it's continuing. So it seems like yesterday's bullish momentum is being reversed completely. So if you're on the short side of this trade, then the potential exit is on yesterday's low, around 7,557. Then we have the EU 50. So European equity indices made an impressive rally on Friday before making some drop yesterday. So today it attempted to go down, failed, attempted to move higher, failed, and now we could be seeing some further downside, but though it's not a very clear trade as per right now. So for now, if you look at the forward chart, a rejection of lower prices, an attempt to go up, which failed. So you can see a long lower tail on the forward chart, a long upper tail on the forward chart, basically indicating some form of indecision around this area. So we are not sure what is happening between this high and this low here. So higher prices were rejected, lower prices were rejected. So the market may actually just be moving sideways. So the US dollar against the Chinese currency, Chinese yuan or renminbi, what we are seeing here is a market that has been persistently moving higher. So from this chart, if I go to the forward chart, it's a very strong bullish momentum. But now, based on what we are seeing with the dollar index, it might make sense to start tracking signs of weakness and a potential drop to the lower side as the Chinese currency starts to recover. So I would be observing any kind of price action that would attempt to break this trend line so that I can trade the reversal. However, if there's a bounce, well and good, I would be looking for something like this. Market gets back to the trend line and there's a strong entry by buyers, then I would trade in that direction, but a break would present a much better opportunity. So I don't know what will happen. So it's always wait and see kind of scenario. So for pound yen, we had a nice break. It's actually a very clean break here of this pattern here. Market goes up, retests the area, which is higher, makes another retest, earlier this morning. And then you can see the kind of candlestick that was making the retest. It was a strong signal by buyers that they are going even higher. So we went high, pulled back for 1 hour, and now it seems like the market is attempting to continue with that path yet again. So in this case, these kinds of pullback often present nice trading opportunities in the direction of the break. So from the daily candlestick, we can see that the market is attempting to move even higher than we saw the last couple of years. So from the weekly chart, this is how it looks like. So from the daily chart, we have already surpassed last year's high. So if you look at 2022, the highest price that we saw was around this area here for pound yen. So the market has rallied and broken that level. And it seems like fundamentally the BOJ is pretty weak. So we could be seeing the pound continue to rally against the Japanese yen. So for now, on the H1 chart, after the pullback in the last 2 hours, we could be seeing the market make an attempt to recover and retest today's high. So I'm trying to check to see if there's any questions on the live chat section. Somehow I can't find any. I wonder why. Is it that the platform is not working? Or is it my side? I don't know this yet. So try to reload my chart. Yes, after reloading, I think I can see some comments now. So I can see Heisenberg, Nick Mojo, thanks guys. A comment, I'm selling pound USD right now this minute. This is not me, it's a comment that I'm reading right here. So let's check it out. It's always a good thing to check it out. See the rationale behind it. So selling pound USD, let's see what you have in mind here. So pound USD has been trading on a sideways momentum. So if you focus on this and this trend line, then it's a market that went down and then up, down, up, down, up. So for 4 straight days, the average price directional movement was sideways. So after bouncing from this lower trend line in the morning, we had 6 consecutive candlesticks moving high. So we broke this triangle and broke this upper trend line. So the upper trend line was holding since when? Since, let's say, the high that we saw on the 16th of May. So for like 2 weeks, this was holding as resistance. And today, the market manages to break that trend line, retest it, and now it's moving higher. I don't think this would be the appropriate time to go for a short trade. I could be wrong. Sometimes I'm wrong in the markets, but after this nice retest of this trend line, the current price action is indicating more bullish momentum. So nothing has changed. The dollar is still weak for the day. So I'm betting on some further upside. This is not trading advice, nor is it a recommendation to trade, but it seems like it makes more sense to trade upwards. So you heard so much, Rufus. Thank you, Martin. Why is the dollar weakening? I don't know. Maybe as I mentioned last week, it's because of a very common trend we call buy the rumor and then sell the news. So there is a lot of people that are very confident that Biden would agree on a deal with the Republicans. And once people placed their bets, we had a very strong dollar and a very strong equity markets. But now that we are almost there and the news are about to be confirmed that the debt ceiling has been suspended, then we could be seeing the opposite effect where both stocks as well as the dollar start weakening. And could this mean the trend of the dollar is changing? Yes, it could be changing. But also after the debt ceiling thing debacle, maybe a small pullback, but the Fed is the key determinant. So everyone is looking at the Fed to see whether they will hike interest rates further. And that will be the main driver of where the dollar goes next. So Euro JPY, please. What's your view on trading dollar crosses? I mainly see you focus on dollar pairs. When you are trading the crosses, you are basically doing double work. So if you're trading pound yen, it's basically a derivative of pound USD and USD JPY, which means that if you are doing your analysis, you'll have to study the 3 currencies. You would have to study the pound USD, study the yen USD, and also study the dollar as a benchmark. That's why we normally use the dollar index. So I try to avoid the crosses, and of course they have higher spreads. So this should not discourage you. So if you have a strategy and it works well on the crosses, then by all means go for it. So has your view on long bullish gold changed? No, it hasn't changed yet. It's the short-term effect where the Fed is seeking to push interest rates higher, or maybe one more time. So for that particular period, we could be seeing a stronger dollar, but on the long run, maybe in Q3 and Q4, I expect gold to resume the bullish momentum. Is the dollar index for advice only, or can I trade it? Yes, absolutely. By all means, you can trade it. So it's just not just used as a benchmark, but personally, I use it as a benchmark to measure the dollar strength so that I can identify other currencies to trade against the dollar. So that's it for the day. Thank you very much, guys. So I think the only question I missed was the euro yen. So for euro yen, we are seeing a market that has been consistently bullish for quite a period now. So there seems to be some form of break happening to the lower side. So it seems like the yen is getting some form of strength that it did not have for the last couple of weeks. And this could imply that the market is ready to go down. So whenever you see an initial break on a trend line such as this one, doesn't always imply that the market is going down. Sometimes it's just a signal of weakness. So this to me seems like a signal of weakness. So we could be looking for other signs of weakness before going for a position. And of course, the 4-hour candlesticks have long upper tails indicating rejection of higher prices. So these are also more information implying that we could be seeing some further downside in Euro JPY currency pair. And of course, we have a double top on the daily. So they could be implying that we could be headed further downside for Euro JPY. And this seems to be quite a theme. If you look at pound yen, there's a pullback, but pound is still very strong. So if it's making a strong rally against the dollar, it's also making a strong rally against the yen. So for USD JPY, you can already see that the dollar is losing to the Japanese yen. So if we happen to see a strong break or bounce from here, remember I described the double top formation, which is a reversal kind of formation. So some further downside could be seen in this one. So that's it for the day. Thank you, guys. Always use your stop loss, do your due diligence, do proper analysis, and happy trading for you all.